Welcome back to Morning Markets on Friday the 15th of December. The Bank of England voted to hold interest rates at 5.25% yesterday, but what were the key takeaways from the meeting? Stay tuned to find out more. As expected, the Monetary Policy Committee of the Bank of England voted to hold interest rates for their third consecutive meeting at 5.25%. The vote was 6-3 in favour of maintaining. 3, however, did vote to increase interest rates by 0.25%. Interest rates have came a long way since the first quarter of last year, from 0% to 5.25% to help manage inflation towards the 2% target. Headline inflation, I'm going to give you some stats here, has moderated from the peak in November of last year of 10.5% to its current reading of 4.6%, and core, which removes energy and food prices, peaked lower and later at 7.1% in May, currently sitting at 5.7%. So all moving lower, but all sitting above that 2% target. Andrew Bailey, the Governor of the Bank of England, noted that there's still a way to go in order to get to the target, hence the preference to hold interest rates at this point in time. He wants more evidence that we are on track to get towards the target before he considers bringing interest rates lower. An area which is of concern to Andrew Bailey and the team is wage growth, which is currently running at 7%. They even mentioned that they wouldn't rule out the prospect of taking interest rates higher should they see inflation changes stall or even tick higher at this point in time. There remains 3 voting members within the Monetary Policy Committee, being Catherine Mann, Megan Green and Jonathan Haskell, who actually voted for one more 0.25% increase in interest rates in order to be sure that we can get to the inflation target of 2%. This was a more hawkish tone which was struck in general by the Bank of England than the one which we heard on Wednesday from the US Federal Reserve, where they recognised falling inflation and robust economic growth is opening the door for them to consider taking interest rates lower through the course of 2024. If we look at the market expectations on the UK, the market is more optimistic that we can see interest rates come down, given inflation's fallen and given the softer economic growth which we're seeing. The market's expecting interest rates in the UK to be closer to 4% by the end of next year. We'll continue to keep you up to date on any developments in respect of UK inflation, economic growth and indeed the expectations of policymakers. Thank you very much for watching. Have a great weekend and we look forward to bringing you up to date on Monday here on Morning Markets.